You buy Tesla stock, I buy Tesla stock, we all buy Tesla stock. Literally. Including Marjorie Taylor Greene, that is loading up on stocks again, specifically AI stocks, and she purchased Tesla in the last quarter. Now, if you don't know who this is Republican Senator Marjorie Taylor. This article from the Motley Fool says she's driving in the right direction, hitching a ride with an electric vehicle EV stalwart for the first time. Greene added shares of Tesla to her portfolio, a stock that provides even more exposure to the burgeoning field of AI. In addition to providing Tesla drivers with the option for autonomous driving capability with its AI-powered full self-driving mode, Tesla has committed to developing humanoid robots that are embedded with AI. And I think we all know what this means. Yeah, whenever anyone in Congress starts buying stocks like Tesla, it usually has positive implications. After all, if the Senate, the House of Representatives, Congress, let's call it, were to have like a ETF, it would be like the best performing ETF ever. They just tend to know when to buy things. Must be perks of being in the Congress. It seems like they just know things before everyone else. Now, not to get everyone too excited, she bought Google, she bought Amazon, some other stocks, all of them valued between $1,000 and $15,000 a piece. But I do think it's interesting she, as well as others in Congress, are starting to buy more Tesla. And here in this video, I will go over all of your Tesla stock news that you need to know today, some positioning stats in Tesla, what's going on in our markets, and yes, I do have a 5.5 minute long clip from CNBC and Tom Lee, and specifically what he said about markets coming next week. First up, let's start with a little bit of Tesla stock news. We do have this piece from Sawyer Merritt that says Tesla has called for bids for its groundbreaking virtual power plant in South Australia. Seems like a long time coming. A network of about 7,000 household batteries that can serve the world's most advanced renewables grid by helping it meet demand peaks. Tesla says that there is an opportunity to grow the system, but it wants to remain as the supplier of the battery packs, the newly relaunched Powerwall batteries that are now in their third iteration, and the AutoBidder software system, and it wants to do the installation. The decision to sell the South Australia VPP is not expected to have any impact on Tesla's plans to launch its own retail energy business in Australia. It obtained a license for that project from the country's regulators in April and in May, and this deal is said to be quite separate from those plans. And rumor is Brazil has unfrozen Starlink and X's assets after seizing a combined $3.3 million. About $1.3 million was transferred from X's bank account, while $1.99 million was transferred from Starlink. And it is also being reported that the new Tesla Model 3 all-wheel drive beat its EPA range rating by 8.5%, which is pretty impressive. Kim Kardashian just posted a picture of her new custom Cybertruck to her 360 million Instagram followers. Yeah, definitely a one-of-a-kind Cybertruck there. But nonetheless, this is good free advertisement on Tesla's part. Sawyer Merritt does say that the Cybertruck has the best factory sound system he has ever seen, with only 15 speakers and 2 dedicated subwoofers and distributed amplifiers, which compares to cars that can have like 25 different speakers or even more sometimes that sound not as good as the Cybertruck. Now, we have a lot more to cover on Tesla stock. We're gonna take a look next at the option activity, the short interest in Tesla, some sentiment barometers. But I do want to play this clip from Tom Lee because he's exceptionally bullish about next week. And as I've explained in prior videos, I'm not as bullish. And that's why I really like to share this because, or share the bullish arguments, because I take in a lot of information. That's what I do. I'm like an information machine. You feed me information. I try to come to the best conclusion possible that makes the most sense with facts that are ever changing. Yesterday's facts could be different from today. react if markets go higher, go lower, price things in, right? That's kind of the strategy behind what I try to employ and what I try to share with you guys. It all comes down to taking in a lot of information. And when I feel a certain way about an event, about a specific event or a period in markets, I don't find validation, or I don't like to find validation in my thesis. I like to test my thesis. I like to try to poke holes in my thesis. I like the opposite end of my argument. And Tom Lee gives that. So if you have viewed any of the prior videos that I have made and posted, where I think next week's probably going to be a sell the news event. I think 2019, August 1st, the first cut from the Fed, is kind of a great example of where we are again. The markets fell 7% within 4 days. It was a clean cut, sell the news event. Markets bounced back. They sold off another 5% or so, and then it was off to the races November and December, okay? I think something along those lines could happen again. It could be a little bit more extreme because we do have an election coming up, and that does have actual implications to policies, right? Tariffs and corporate tax rates. There's bad associated with the election. We know that. At some point, there will be a deeper correction or sell-off based on that. But in the near term with next week and the Fed, it's all about the economy and whatever implications we get about the economy. So I do like a couple things specifically of what Tom Lee said here. And he is very bullish on next week. I'm not. And I don't think a lot of us are. So I think that's why you really need to pay attention to what he says here.
Today's action with our first guest, Fundstrat Global Advisors co-founder and CNBC contributor, Tom Lee. Tom, the small caps that I know you're watching closely had a good day. But, I mean, is it September or is it not September, right? We had a rough start, and now some of that's in the rearview mirror.
Yeah, I mean, I think if viewers are sort of confused, I think that's what the next 8 weeks are going to be like into Election Day. I think it's a very challenging period because no one can have conviction until they really know who's in the White House. But there are some positive sort of supports coming into play, and next week is the Fed meeting. We know the Fed is going to make some cuts. And with the inflation data being supportive and the labor markets needing some support, I think it's going to give the markets some confidence. So I think we do kind of trade well into that meeting and maybe even the week or two after.
Does the market need a 50 basis point cut to stay within that 5,300 to 5,700 range that you think we're going to bounce around in?
You know, I think that a 25 or 50 has both hawkish or dovish implications.
Right.
So I think it's ultimately whether Fed Chair Powell comes across as this is the start of a cycle where they're confident that we're moving back towards neutral. And whatever number they make is actually quite dovish and positive. But if it seems like this is dragging along the FOMC members, and then there's even concerns about a hard landing, then I think the market can view anything they do as negative. I think it's going to come out positive, though. But
I mean, it seems like the Fed chatter would be in that direction. They didn't want people to get too excited about too much in terms of rate cuts. But now that they're there, it seems like they're signaling that they're kind of on a path.
Yes, that's right. But from a market's perspective, I think that they'd like to see the Fed sort of acknowledge that inflation is moving back as a secondary concern, and supporting labor markets while not in a recession is incredibly important. So I think that you're right. There's a chance that this could all be interpreted negatively if the Fed seems really reluctant to cut.
Most people ought to be investors, not traders. So are we up against, whether we're talking about the Fed or even about the election, a potential narrative shift in the markets or no?
I think in the near term, we're losing visibility. And, when you don't have visibility, people get scared and they sit on their hands. But over the next 12 months, I think investors should be pretty confident. When the Fed has cut rates while in a soft landing or no landing, the win ratio or markets higher 6 months, 9 months, 12 months later is almost 100%. And we also know post-election markets almost always rally. So the November, December looks pretty good. And I think the policies of both candidates is good enough for markets to do well next year. So I think we might have turbulence now, but it looks pretty good after that.
Now, back to that turbulence, for people who are trading, it's been a weird September because usually when the month starts bad, it's bad. But we have this situation. How do you read it?
Well, yeah, you're right. If you took the 10 worst first week of September, it's like the 10 times the September was down 2.5% or more. 10 out of 10 times the market never finished positive.
For the month.
For the month. In fact, if you took the 20 worst first weeks of September, 20 out of 20, September was a down month. So, however, 3 out of 10 times from the 5th day, which would have been Monday, to the end of the month, you actually clawed back gains. You just didn't finish the month positive. So I think it's a strange seasonal. I might just say, to me, next week is more important because it's the Fed and the put coming into play, and that might be the dominant factor for the rest of the month, and that could be quite a support for markets.
So let's talk about some broader issues, particularly mega caps versus small caps. We saw a big comeback for NVIDIA. We saw really some continued flexing strength from the likes of Apple, which is now, I would say, firmly on top in the market cap race, such as it is. And then we've seen small caps struggle more than some might have hoped, though today is an exception. Which is more influential in this market?
They're both important, and they reflect different, investor views. I think you still always want to own the best companies in the most important themes. I mean, that's NVIDIA and that's Apple. And they're going to really work over any cycle. But when the market begins to believe the Fed is going to move rates back towards neutral, and that's both cost of money, mortgages, auto loan rates, these are really big tailwinds for cyclical stocks and small caps in particular. So I think that's why I'd still want to make a very educated bet with high probability that small caps could do very well the next 12 months, and even between now and year end.
So with that said, let me know what you think about that down below in the comment section. Again, as I have said before, I do think you're going to get a sell the news event no matter if the Fed is dovish. Now, if Monday and Tuesday markets sell off, then perhaps you don't need to see that sell the news event if the Fed is dovish. Now, if the Fed is hawkish around the economy, they're talking about larger cuts, more aggressive cuts, higher unemployment, lower GDP, markets will still sell off. And basically, dovish is dovish, hawkish is hawkish, right? So that's kind of the same. I'm guessing the markets will react if we get a dovish Fed. If the Fed sounds like soft landing is coming, they're just normalizing things, they're not concerned about the labor markets, that's dovish, markets go higher. If the Fed's concerned about the economy, unemployment, projecting more cuts, that's the hawkish argument, and that's where you get maybe a larger than 5% sell-off. That's like a 10, 15% sell-off. Maybe 12, 13% sell-off would be more logical. We need to see what happens Monday and Tuesday to get into actual percentages and to be more definite about that. But I do think a sell the news event is coming. And I did like Tom Lee's perspective there. Now, as I have said before here on this channel, as I said in the last video specifically, the areas that will do well, if I'm wrong, if markets do go higher, it's not the S&P, it's not big tech. Yes, can they go higher? Of course. Will they outperform? Absolutely not. Small caps, dividend stocks, value, cyclicals, biopharma, or biotech, if you will, software, heavy indebted companies, long duration growth companies. These can be software stocks with high PE multiples. These are going to be the names that do very well. Now, there will be a bias to quality, I do think, right? Lower the quality, the not as impressive rally they will have, right? I think higher quality companies will have a larger rally associated with them. I do think in that event, Tesla stock can do very well. It will then turn into the discussion of, where is the economy at? No matter if we get a 25 or 50 basis point cut, which 50 basis points looks like the most likely scenario, the markets will start to then hyper focus or fixate again on the economy. And that's what is really going to drive a 20, 30, 40% crash from here, or 20, 30, 40% upside in the Russell and dividends and value. Because let's be honest, if you exclude, so the S&P is trading at almost 21 times earnings for next year. That's rich. That's expensive. I'm not expecting much upside momentum from those valuations. But if you exclude the Mag 7, if you will, or Mag 6, you're trading at a P multiple around 15 and a half times. A historical average is like 19 times. So there's quite a bit of upside that could come in markets if we do get that dovish Fed, if markets do not take panic from the first Fed cut. And yes, we'll talk about this more coming, Monday, Tuesday, when we get a better understanding of kind of how the markets are preparing for that. If markets are rallying into the Fed or selling off into the Fed, can, change the potential, outcome and what I'm forecasting. But nonetheless, if we take a look at option activity for Friday in Tesla stock, you did see 22 different trades totaling $5.9 million with a positive order value of 59%. So it was very positive from that regard, or at least more positive than negative. We will take that. Tesla short interest off free float sitting at 2.84%. You do have $18.12 billion currently sold short in Tesla stock, totaling 78.85 million shares that are currently sold short. You did have return shares of 580,000 on Friday, borrowed shares 431,000. That means you actually seen about 150,000 shares that were on net covered on Friday. So that's definitely good. Now, if we take a look at Tesla stock, some of the sentiment barometers, you can see over here on StockTwits, sentiment is at 50. Yesterday it was neutral at 50, so that looks good. Message volume is normal at 52. Yesterday it was normal at 53, so a little bit lower of message volume, not a big deal. Participation ratio is high at 55. We did see on Friday the percent of stocks trading above their 50-day moving average had a great day. About 8% of stocks traded above their 50-day moving average, at a total of 57.23% of stocks currently above their 50-day moving average. There's a lot of room to strengthen to the upside or to weaken here, so I don't really think that's telling us all too much. Google Trends data continues to kind of trade sideways for the Cybertruck at 53, the Model Y at 23, the Model 3 at 22, the Model S at 9, the Model X at 8. You're not seeing much of a change here on Google Trends over the past couple of weeks. I do expect things to start ticking upwards as Tesla started offering 0 down at signing and 0% interest rates on the Model 3. I do think that's going to have a positive impact to Google Trends. I think that's going to have a positive impact to demand overall. We'll see that, I think, reflected in the Google Trends data, but we're not seeing that just yet. On Friday, we also did have the Fear and Greed Index at 49, which was a lot better than what you've seen on Thursday. On Thursday, you were at 43, so that was a 6-point jump in the Fear and Greed Index, and markets are about as close to neutral as you're ever going to be. So let me know what you think about this information down below in the comments section. Again, I think next week is going to be massive. I think it could either cause a huge rally for Tesla. Yes, I only think it's a 30% chance. But that rally could take us well into the 300s. Like big upside is possible here. We're starting a new regime from a Fed that was raising rates and holding rates steady for 18 months now, to almost 3 years later, we're about to get the first Fed cut. Like, this is like Christmas for any economist or strategist out there. And yes, if you're in markets, you are a strategist at the bare minimum. Even if you're not an economist, you are a strategist. And for you, this is probably like Christmas as well when you're 10, right? This is something new. This is something different, something long lasting. And it's exciting. And there's going to be a lot of opportunity, but I don't want any of you guys to rush into it blindly. You should really take in all the opinions you can, try to come to the best conclusion possible, and do what's best for your situation. If you're all in markets already, maybe it's a good time to pull back. If you're not in markets at all, maybe it's a good time to get in a little bit, some exposure in small caps, dividends, value, cyclicals, right? These don't have to be super risky stocks. Like, you could buy a Dollar General. You could buy a CVS. Like, those are two stocks that I own that I'm very confident over the next 12 months could probably double up from here pretty easily, in my opinion, that have very low risk at this point. They're already trading at multi-year lows, like not in good situations, not because their earnings are bad or their numbers are bad, just because the market sentiment has been so bad around them. Right? Or you can go on the riskier side. You can go with something like a Tesla or a Fubo or a SoFi, or, some of these stocks that are a little riskier, right? You can build, this is a great time to build into positions and just be ready. If we do get, downside from here until the election, then that's probably a buying opportunity, as long as the economy is not weakening into a recession. That's the key. If we weaken into a recession, then you could see like 50% downside from here in the S&P. Pretty easily, considering how high we are. My thoughts, I don't know. Maybe I'm just preaching to the choir here, or maybe I'm preaching to nobody. Let me know down below in the comment section what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys do want to come trade with us as well, check out that link down below in the description of this video. We did make a pretty big trade for the Fed that I actually like a lot, not guaranteed you're going to make money. It's not financial advice. It never is, but just kind of, I share my logic. I share my reasoning. You can come talk to us, come, trade with us, do your thing with us. Never financial advice, though. Link down below in the description of this video if you guys do want to join it. And by the way, there was somebody scammed really bad recently. I'm not going to say who or how, but whether you're on the Discord, make sure you're talking to me, okay? Make sure it's not somebody like impersonating me. Make sure it is actually me. If you're, and same goes for the comment section. Make sure you are talking to me if I'm responding. You will see if it's me, okay? Don't respond to the bots. There's nothing I can do about them in the comment section, okay? Just a quick little rant. Try to get them removed. I've tried to do whatever I could. Contact Google, so on and so forth. Nothing happens. They come back. So just be mindful of the scams out there. And if you're trying to communicate with me, communicate with me. Not with bots, not with anything else. Verify that by all means. And if you guys ever want to shoot me a message, go over on X and shoot me a message over there. It's Michael Tyler. Hopefully you guys are following me over there anyways. So you get some of this insight information, some knowledge from the econ side or the market strategist side before a video is ever posted. So nonetheless, you guys enjoy your day, your weekends, and I will see you in the next one.